Hey everyone, welcome to the top tier outlook for the week of July 29. We're wrapping up July. We're moving on into August. We have a lot to look at as we wind down this month. Probably the first thing to really acknowledge about this month, and let's take a look at the month to date in terms of our sectors, because this is actually a pretty interesting chart right here. And what this tells us, let me just darken this up a little bit. There we go. And what this tells us is not what was, but what is. And that's a conversation we have a lot. If you watch me in Charts and Coffee, or if you're in the Sector Secrets Mastery Room with us, we know that 80% of our time really should be trying to decide what to trade, right? What is our watch list? That's where the vast majority of my time is spent. What do I want to trade? What has the best trend? Where is the alignment? And now we have that window to earnings and be cognizant of all the things that are on the economic calendar. All right, so that takes time. The thing that's least time consuming is putting together a trading plan around it, especially if you've systematized the approach, if you've automated some of your indicators and taken out some of that subjectivity, and you know exactly what you're looking for. Because either it's there or it's not. In fact, one of the things I used to do early on in my career when I take a look at a chart is that I'd say, okay, whatever's going on here, I've got a minute or I've got 2 minutes to see what's here. And if there's nothing in that time, there probably isn't any. And if I give my brain more and more time, it's just going to find something to do. So sometimes it's good to even keep a time limit on how long is acceptable before you say, nope, there's nothing here and I've got to move on. Anyway, so if we take a look at what we trade, being more important in how we trade it, right? That's the bottom line. We know that the sectors that are sitting above the zero line, those sectors month to date that are yielding positive returns are nothing like the sectors that we saw outperforming in the first half of the year. So if I'm still looking at the Magnificent Seven for the move higher, if I'm still obsessed with what's going on with semiconductors, which was a great place to look in the first half of the year, NVIDIA, Taiwan Semi, and what wasn't moving higher. If I'm still looking back, thinking, that's what's still happening, or, waiting for that to occur again, I'm going to miss what's happening now. What's happening now is regional banks, gold miners, oil services, financials, which is why the Dow's up. We saw the utilities up, which tells us that there's still a good bit of defensive interest, like those defensive sectors. So industrials are up, also helps the Dow. Basic materials are up. Healthcare, staples, again, another defensive corner. And then lastly, energy. Most of what's here disproportionately benefits miners, gold miners, and the Dow and the Russell. I mean, that KRE sitting way up here at the top of the list disproportionately benefits the Russell. So when folks say, Rog, why is the Russell up? I look at it for two reasons. One, KRE is up. And then if I look at the Dow and the Russell, they lagged the first half of the year. And sometimes it's as simple as saying, hey, do folks, when they look at the first half of the year versus the second half of the year, those traders who manage money have to show their results to a client at the end of the year, are they really thinking that the S&P and the NASDAQ are going to keep on that track of all-time highs on somewhat regular basis? Or are they going to say, gosh, maybe we should look at something that's maybe on the second floor of the building, not at the penthouse, because there's a whole lot more room to move on up. So yes, this is exactly what, if you look at it now, we're seeing. And there's always evidence of these things. It's not that it has to catch us by surprise. It's not either that we have to predict the rotation either. But remember, rotation out of high-performing, profitable sectors and stocks usually benefits the laggard. So you look at the top of the normalized performance, you look at the bottom of the normalized performance, and that's oftentimes the rotation. The other part of that is, when does rotation tend to happen? And it's much more punctuated at the end of a month, but more so the end of a quarter. You could even say there's two very important quarters every year, the second and the fourth. One's halfway through the year, the other one's the end of the year. So if you think about not predicting, but just narrowing the field down to what could rotate from into two, right? And then when could that happen? That's the best we can do. And that's a methodology that we can look at the end of every quarter, and most especially the second and the fourth. So that's where we sit right now. And this doesn't look anything like the markets of the first half of the year. And that's okay. Because look, money doesn't go under the mattress. It's not as if it's just going to sit somewhere if folks can't buy NVIDIA, right? The world didn't end when SMCI stopped making higher highs, did it? Money just found something else that interested it. So now what's really interesting is big banks, regional banks, the Dow, industrials, the Russell. So we just shift our attention and say, well, what's in a trend now? What was in a trend? That's ancient history at this point. What's in a trend now? Where is money finding something interesting? And in a lot of ways, when we take a look at the Dow, this is very much a breakout through 4250 in financials. Your number one weighted sector in the Dow is financials. And when you have a breakout like this, it's definitely going to benefit the index that's weighted with financials the most. That's the Dow. And it's not that unusual to say with the KRE, breaking out the way it did. And you could say, Rog, when did that breakout really occur? Basically above 5180 to 52. And then if you take a look, when did that happen? July 11. When did the Russell start really moving and grooving? July 11. So when the heavy weighted sector of the index, in this case, the RTY futures, or if you're looking at the IWM, that's fine. When you see those things happen together, this is the cylinder of that motor, the regional banks, and the actual motor, the Russell, right? You can see them firing off together. So that's a lot of what we're seeing. It's just not XLK and SMH technology and semiconductors dragging the S&P and the NASDAQ higher anymore. That's okay. Money's going to find somewhere else to go. All right. So first question here. With the FOMC this week, what does the playbook look like? Can I share an if-then-else fashion? Emmanuel, I have no idea what I'm going to trade this week, but I can tell you it's going to be relative outperformers. It's going to come from this list. It's going to be focused on gold miners and oil services and financials, utilities, industrials. We've got some staples positions on. Love to get some healthcare. So the list is right here. You want to know what I'm going to be looking at. That's the upper half of the list. The next thing is, well, in terms of an if-then, in terms of the Federal Reserve, this meeting is really not as important in terms of the result, because the July 31st meeting is widely anticipated to be a hold. This is not a cut meeting. And while there were whispers of July could see a cut, what is often omitted from a statement like that is, I think at most, it was maybe a 6% expectation, while the hold was in the 90s. So we're going to get a hold, right? That's number one. But what gets interesting about that event then becomes, when you scroll on down to Wednesday, is it about the rate statement? Partially, we don't want to see the rate statement look quite as pause and headwind. We want to see in the rate statement that there is an opening of the door to the very next time the Federal Reserve meets, which is going to be in September. They don't meet in October. That when they meet on the 18th, they're going to be primed for a cut. Yes, there's going to be this month in between, which could account for some wait and see, but most of that has to be shelved. And that's what the rate statement importance is going to be. And then following up the press conference on at 2:30 on Wednesday, that's going to be when we want to see a further detail, further iteration of what looks to be opening the door to those September cuts. Now, I'll tell you, if the Federal Reserve does not plan on cutting in September, the reason I would look at this and say they're okay with it, this is their plan, is because it's been up above 80 for weeks now. And there's been plenty of time for different Fed members in different scheduled events to talk this down if that was the plan within the Federal Reserve. Powell will have one more shot at it if, for example, they're thinking, oh my gosh, the broader markets think that we're going to cut. This is fully discounted at this point, and we really don't intend to, or we're really not that convinced that we're going to, that it's going to be a game time decision, then he's going to have to walk this down. And at this point, there's probably more concern when this is so fully discounted that he doesn't sound, excited enough for the rate cuts that it could be a little bit of a letdown. But this is all supposition. It's all psychology. What I can tell you, the data says, is that we're going to get a rate cut in September. and that if the Federal Reserve wants to walk that down, it has to start soon. It has to start really on Wednesday because there's no meeting in August. So that's the way that I would look at that scenario. How do I see the NASDAQ this week? Well, right now, Ivan, all that matters is right now. Right now, it's still weak. As far as this week goes, this is always what I tell my members. I don't know what I'm having for dinner on Friday, Ivan. Do you? I don't. Maybe you do. I don't know. Maybe you do. I no sooner know what I'm going to have for dinner on Friday than I know what this NASDAQ is going to do this week. Our job is never prediction. Our job is always reaction. And as long as we remember our job is reaction and risk management, then we're in good shape. The NASDAQ is very, very heavy. If the Federal Reserve is, look, some people say, well, what if Powell is really positive about the rate cuts? That's already out there. Remember, gang, for those of you wondering, Rog, couldn't the NAS rip higher after Wednesday? Sure, it could. But remember, the fact that they're going to cut rates in September is not a well-kept secret. It's really very much discounted into the September Fed Fund futures. So clearly that sentiment is not helping the NASDAQ. Here's what I will say, though. In terms of the trend that the NASDAQ is in, which is actually neutral. I would not call this a downtrend in the NASDAQ. It's bearish chop, though. So probably the most important thing that I can see on this chart is that the 10% pullback at 18,885 be something that the equity, this particular NASDAQ, this NQ, not the QQQ, that the NQ closes above. If there's going to be some kind of floor get put in, I'd like to see the gray zone of the volatility support right here hold. I'd like to see 18,885 hold. And if those things can happen, then at least there's a floor that's being built. But, I think, Ivan, the most frank thing I can tell you is I don't really near term want to distract myself because remember, attention is finite. Right. If my concern is what's the NASDAQ going to do, that for me and for a lot of the traders will say, well, are we looking at the NASDAQ? Are we looking at the Dow? Are we looking at the Russell? Where is the clarity? And the NASDAQ doesn't have the clarity right now. So what I would like to see this week is that after the FOMC and after non-farm payroll on Friday, going into next week, not as in this first week of August, but the second week of August, I'd like to see the NASDAQ pick a side. I'd like to see it put in a support level. And then maybe the second week of August, I'll take my attention and, frankly, our capital, and I'll start seeing if the NASDAQ merits our attention. I don't worry about trying to pick a bottom on the NASDAQ. It's not a high probability thing. I feel a whole lot better about trying to find strength in things like financials, industrials, healthcare, gold miners, regional banks, the Russell. So it's just a matter of where do we want to put our attention? And I'll be straight up, little to none of my attention, unless I'm day trading, by the way, a little to none of my attention will be on the NASDAQ this week. Let's get through the FOMC. Let's get through non-farm. And I know that's not a popular answer, but I'm not here to say what everyone else is saying, which is, where's tech going? I kind of think, who cares? Because financials are moving, regional banks are moving. And if I am so concerned with what's happening on that side, I'm going to miss opportunity on this side. And that's the way. So thank you for the question. I think it's very much a question that's in a lot of people's minds, right, Ivan? So my thing is, let's focus on what's moving now, and then next week, for sure, ask me next week, on Top Tier Outlook next Sunday, let's dive back in to see what the NASDAQ was able to accomplish this week. And then next week, we'll see if there's some swings, but that doesn't take some day trades off the table. For sure, I'll be interested in some short term. Yeah. All right. So I hope that makes sense. All right. Next up is Mr. Walker. I want to go long the IWM on the daily. However, I want to buy at least January expiration. So this is July. If you want to give yourself more time, remember, it's going to cost you more, right? So, Mr. Walker, I think the first thing is I don't want to buy the Russell now. It's got to pull back. And then at that point, regardless of the expiration, I'd be open to a trade. But just keep in mind, if you're going to go out to January, these things, even on a pullback, if you're looking at, say, a 215 strike, let's say you look at a 215 strike in January 17th expiration, you're probably going to still be looking at about, I'm guessing, $1,700 per contract of the IWM. And that may not be a problem, right? But I'd say it requires a setup like anything else. There's a lot that could happen between now and January. So obviously your thesis is it's going to keep moving higher. So my thought is, if I were to do that, I would want to see a pretty decent pullback, maybe to 212.5 to 215. And then if the ambition is clearly higher highs, that's after that pullback, that's when it would make the most sense. All right, next up, Michelle, thank you for your diligence and willingness to teach. I'll tell you, Michelle, folks were generous to me once upon a time, helping me navigate through the market. And I like talking to traders who want to get better at trading. It's a rare thing versus folks who just want to kind of blindly watch television, follow the leader, trade blindly. So I like to give my time to folks. I like the discussions that come from this. Frankly, self-servingly makes me a better trader, right? So I appreciate that. But I get a lot of fulfillment from it too. You're a huge factor contributing to my much appreciated incremental growth. That's the best kind, lesson learn, brick by brick, right? So, and account growth. Beautiful, Michelle. That's awesome. That's awesome. Look, I have a community of traders, and the way I like to trade is within a community of traders. A lot of folks say it's almost become sort of hackneyed, but trading can be lonely. Most traders don't have friends and family that have trading experience or even interest. And no one can understand what it's like to be a trader. I just I think I put it on the Twitter today. I put a little 3 things from 30 years of trading. And one was, no one can know what we go through unless they're traders. 2, don't listen to folks. Everyone's going to give you advice. Don't listen to folks who aren't traders. They don't know what it's like. And I think those are 2 really important lessons, which is everyone's going to have an opinion on the market, and that's okay. But unless they're putting money on the line and trading, not longer term investing, unless they're managing risk in a short term way, there's no way they can know what we're looking at. And it's tough. So it's really great to have a group of folks that want to do the same thing, get better at trading and focus on trading and support each other. So, Michelle, I'll tell you, I get as much out of it. I love the time spent, to be quite frank. I'm going to be trading anyways. Why not do it with a group of people that I enjoy hanging out with? And that's exactly what I have in the Sector Secrets Mastery. I have a group of almost 1,000 traders, and I've gotten very lucky. They're positive, they're focused, they support each other. They're not looking after the newest shiny object, every other week. And I'm very grateful to be able to log into that room every day and feel that we have this virtual trading floor together. All right, Bank of America. Earl, I have a long position in Bank of America, so maybe I'm biased in that regard at this point. I'll tell you though, I the same day that I was looking at Bank of America, I was also looking at JP Morgan. I was also looking at Citi. And so at this point, Bank of America is a little bit of a laggard. I'd like to see it play catch up. It's going to play catch up most likely if XLF continues higher and the Dow continues higher. So it's got a little catching up to do to some of the other strong names in financials, namely JP Morgan and Citi. I took Bank of America because it hit the zone. JP Morgan was close, did not get a piece of the zone that I wanted, but I would keep an eye on all 3 of those symbols. I'm not sure Bank of America is going to be the one that outperforms because right now it's not behaving that way, but I still have a long position there. All right. So that is what I'm looking at on Bank of America. And, for those of you that are wondering, Rog, what do you mean those the best 3? Part of what we do in the room is just start to distinguish between stocks that trade together versus stocks that are outperforming the things that they trade with it. And we definitely don't trade our favorite symbol. I mean, there's still traders waking up every day going, what's happening with NVIDIA, or worse, what's happening with something like SMCI? That was yesterday's news, right? What's moving and grooving now? Financials, but are they all strong? No. Berkshire, JP Morgan, Goldman, American Express, those are your trends. Bank of America is hanging in there. Citi's green, hanging in there. You can keep an eye on Morgan. That's hanging in there. Wells, worth keeping an eye on. A great surge since it sold off after earnings. That's hanging in there. But your 4 trends are those 4 symbols. And that's how easy it is to recognize. As always, gang, thank you so much for being here for Top Tier Outlook. I'll see you tomorrow for Charts and Coffee at 9 a.m. Same time, same channel. Be good to each other, gang.